Hey, welcome into the Real Estate Scoop. Hey, we're going to get directly into it. You already know who I like to bring on as my favorite lender to speak with, Oscar. We're going to get into it again today, baby. Oscar, how was your Merry Christmas, man?
Oh, it was good, Craig. It was good. Just got to spend time with the wife. How about your Christmas, Craig?
You know, opening some gifts. You know, kids got what they always get. And then, it's just been another holiday. I
That's
try not
awesome.
to
That's
get
awesome.
tied up in Christmas. I like vacations more so than staying at home, but this is our first Christmas in the house. So we stayed here this year. But next Christmas, goal setting, I plan on being on vacation.
That's the plan. That's the plan.
Yeah, that plan on it. So let's get directly into it. I think we got a jam-packed episode for the audience today. I really think that we can get into some things in preparation for 2023 that maybe we're going to focus a little bit on home buyers in this episode where we talk about basically how to prepare yourself if you've not already taken steps to prepare yourself for getting yourself set up ready to purchase a home in 2023. So let's talk about some tips that we can start with. What would be some advice as a lender that you would want to see a prospective client show up with ready to go? That way you can help them make the best of their situation.
I guess the best scenario would be somebody. Let's say somebody wants to purchase a home in 2023. I guess somebody with a clean slate, really. They come to me and say, "Hey, Oscar, like, what could I do to purchase a home?" And they come to me and I can take a look at what they got going on. If there's nothing going on, perfect. I can kind of guide them in the right direction.
Okay, so
So
that's picture perfect situation, right?
yeah, yeah.
How
That
often
would
do
be
you get one of those?
never honestly because usually when somebody's trying to purchase a home, life's already happened. They finance a car, they have multiple credit cards that they utilize, so they have debt, stuff like that. But yeah, for the younger guys and gals who are trying to purchase a home, I think that's one thing they should do is just contact the mortgage loan officer. That way, they can figure out where they're at in their financial situation, and then we can go from there.
So okay, so now typically, how does this usually work for you? I feel like we already know the answer, but let's just see how this works. So typically, somebody says, "Oh, I want to purchase a home. Let me call my mortgage officer first," or do they? "Oh, I want to purchase a home." They call their agent first, or an agent that
Yeah,
they think they want to meet with, and that agent is typically the one that has to have the person make the introduction for you with the client, or does it work where you just get the phone call first?
no. So 9 out of 10 times they contact the real estate agent first because everybody knows what a real estate agent is. It's kind of like the sexy thing in the real estate industry. A real estate agent, a mortgage guy is not so sexy. It doesn't sound sexy. So I feel like that way is more appealing to people. So they contact the real estate agent, and then the real estate agent refers business down to me.
Got you, got you. So this is why it's important for lenders and agents to kind of have like that symbiotic relationship where they have like a referral program for each other, so that way that they can actually help each other out and grow the business, but also give the client more avenues to actually get somebody who's going to be in their corner and work for them.
Yeah, 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 and that's how it usually works. There's some point in my career I want to refer business as much as I can to real estate agents, but that's just the reality of like the mortgage industry.
Yeah, I mean, so I would be highly impressed. I have not seen it, obviously, but I'm pretty sure it does happen a lot. There's certain cases where lenders get calls first and then they refer them back down to a business. I think like more of the bigger branch lenders probably have that thing where they basically do referral programs, but
Yeah.
I even highly doubt they really use those as much as well too. But okay, so we get to the point where the person realizes they want to purchase a home, and then you realize that there's some things that happen in life, like you called them, that they've already had action that has happened, and they may be close to qualifying, but they're not ready to qualify yet. Before we get into what you would guide them or advise them to do, let's talk about what are some of the qualifications they need.
Yeah, so some of the qualifications they need, I mean, they need like a 2-year work history. It doesn't have to be exactly a 2-year work history. If you recently graduated like from college or technical school, you can still use that as work history. We just need to see the transcript so you can back it up. And then because all the lenders want to see is that you have stable income coming in.
Okay. Credit score?
Credit score, just depends. Some lenders can only deal with like 620. Myself as a broker, we can deal with 580, but usually when it comes to that, they have to have a little bit of reserves in their bank account. That way, because we run it through a system called AUS. And usually when it comes down to those lower credit scores, the more reserves they have in their bank account, the more of a chance we have them to get them approved through that system.
Okay. And then what about also debt to income ratio? What's the max that you're looking for?
So with debt to income ratio, it really depends on who you're shopping with. Like some lenders can only do like 45%, but myself, it just depends on what type of programs we do. Like when it comes to VA, we can sometimes get it to 55, 50, 56%, just depending on the situation that the person has going on.
Okay.
So
So what happened if you run into a situation? I'm just spitballing ideas. What have you run into a situation where um a couple they're wanting to apply for a mortgage together and one person in the couple qualifies but the other doesn't?
yeah, so I've had that scenario happen, right? It's like one couple has excellent, one person has excellent credit, 700 plus, and their spouse, has like a crappy credit score and that we can't use it. So what usually happens is we try to just qualify that single person on their own and, and just we won't include the spouse in that transaction.
Okay, so because that in Virginia, I guess you can do that, right? Because it's not what a common law state. I think that's what it's called.
Yeah, I'm not sure yet, but yeah, I know in Virginia, yeah, we can do that.
Yeah, I know. Like in California, you can't do it because, well, you can't. They can be. They have to still be on the loan and all the documents for the loan, but they loan score doesn't have to qualify them for the mortgage. Though they can still just be on everything. So, but obviously they can still be on the title and everything else in Virginia too if they want to pay the extra fee for the title in that way, right?
Say that again.
So for the titling, like if they want to be on the title, the spouse needs to be on the title for whatever. They had just the qualifier just has to pay the extra fee
Yeah,
to have the person on the title, right?
so yeah, you can do that. You can have one person just qualify for the loan, but both people can be on title. Yeah, that's totally
Gotcha.
fine.
All right. So we talked about credit score. We talked about debt to income ratio. We talked about 2 years worth of history. Okay, so one of the things that you did say was that basically, even if you came out of college, so say I'm a doctor, would I be able to qualify at a doctor's salary, even if I didn't, only if I had like 1 year of history and then the rest of it was college transcripts? Would you still be willing to assume the risk of the loan with a doctor's income salary if they only had
Uh,
1 year of history?
yeah, I don't think so because I think when it comes to doctors, they're still like on a. It's kind of like they're in the military. They still have to like go up through the ranks. I know once they like graduate, they don't make doctor salary right off the bat. I think they got to go through certain stages until they get to that point.
Okay, so that they finish their intern and all that stuff.
Yeah,
Okay, gotcha,
yeah.
gotcha. Okay, so I just wanted to kind of give clarity to that situation too. So I guess the same would be it would be almost the same for lawyers as well too. Eventually, they'll get to a point where they're making that income, but they just not going to start right out the gate no matter what.
Yeah, because I think the lenders have to like take in consideration like how much income they're making, and if they are able to afford the mortgage right now, you
Right.
know.
So what about a 1099 employee? Like,
When it,
how difficult is it for a 1099 employee to actually get qualified? Because sometimes 1099 employees, their income is not as fluent. It's not going to be as consistent as someone who's a salary employee.
yeah, so when it comes to 1099, I would say this: if you're a 1099 employee out there and you're trying to purchase a home in 2023, just be careful of what you're writing off because you can make $60,000, but you're writing all this stuff off $50,000. The we're gonna take in consideration that you've technically only made $10,000 that year. So
What?
yeah,
Hold on, time out. Time out. I was not expecting you to say. So wait, so the tax deductions are not considered, huh? Okay, that's something that I didn't know.
yeah. So that's one thing that you have to be very careful if you're 1099 because I haven't dealt with it personally, but I've seen my boss deal with it that they say they make $100,000, but they wrote off $90,000. You know.
So you mean to tell me, as a content creator slash realtor, if I decide that one day my content becomes king and I decide to go into space, I better have all my ducks in a row with all my.
Yeah,
I'm about to buy my house before I decide to go
yeah,
to go into content creator. That is crazy. I didn't know that. Like, so that makes it insanely difficult. So you have to have a good CPA that kind of can work you through
yeah.
these things, that kind of advise you on these things in advance.
Yeah, so I would say, yeah, I would suggest if you're 1099, like I would suggest you having a good CPA on your side. I feel like it's worth you paying that amount just so you can, you're all right when it comes to buying a home.
Wow. So have a good CPA if you're a 1099 employee, and then definitely understand you might need to have a lot of cash on hand to even purchase a home.
Yeah, yeah. When it comes to 1099, yeah, because I've dealt with a situation. I mean, this is a non-QM loan that I dealt with. This person was a 1099, right? So this is a real experience. He'd only made like $60,000, but he wrote off $50,000. And this individual that we were dealing with, it was a non-QM loan. So the way that we were able to, qualify him was through bank statements. So they would
Mm,
average out the 12 months. They would do they would average out all the deposits from his job.
wow. And they gave him a number, and then that number was the
Yeah,
income that y'all considered that he reasonably could probably. How do you
yeah,
reasonably even expect him to make that the next year, though?
yeah. See, that's one thing when it comes to 1099 too. It's like the employer wants to see if if you're going from a W-2 position, like let's say right now, like if you're going from W-2 and next year you go 1099, that's going to be a huge problem when you're trying to get approved for a loan because lenders want to see steady income.
Right. Right. Okay. So, man. Okay. So this is a good conversation already. So let's talk about this a little bit more in depth because this 1099 thing has me perplexed a little bit. Okay. So, all right. So when you say that they averaged out the income, basically averaged out the deposit, they came up with the income. Then this person has to somewhat give you like a business plan that they're going to expect to make more than that the following year, or is it just okay? We believe that you're going to make this again.
Yeah, when it comes to that, I believe like let's say if they're like applying for a home loan like in the middle of the year and we're just kind of like see usually like let's say they're 1099, we'll just average out the last 2 years that they
Mm.
did their taxes. But in this person's scenario, he wasn't a US citizen. So it's an ITIN loan. So it
That
was a
makes it
non
even more crazy.
yeah. So it was pretty crazy, but we finally got him pre-approved, but it was definitely difficult.
That basically shows that y'all provided a great service. Y'all just didn't shut it down and say, "Hey, well, you didn't qualify. We'll figure. We sorry. Go try another broker." Y'all work with the person to figure out exactly detailed reasons why y'all could make it work and help that person secure a loan.
Yeah, and that was kind of the advantage of working with me with the real estate agent. She came to me like knowing that I could kind of like solve this problem for this individual, and even though it was not QM loans, they come with high interest rates. In this scenario, he has to do a heavy down payment, but at least we kind of like provided something there for him. We didn't reject him, and we didn't give him the idea that he can't apply for a loan.
But he also gave y'all flexibility because he was able to make that high deposit as well.
Yeah, yeah, that too. I mean, he was like it all comes down to communication. I asked for a year's worth of bank statements. That way we can average it out. A lot of people, when it comes down that path, it's like they won't, continue down. They'll just give up and get frustrated. But yeah. So he gave me all the information that we needed, and we were able to like, you know, give him a pre-approval.
Okay, so now let's talk about basically you kind of like already answered my second question because we started down the pathway of actually talking about how someone gets qualified, right? What do they need? And then my second question was going to be, okay, now they run into bumps in the road with their credit report. What avenues do you help them with to try to get that corrected?
Bumps in the road with credit report. What do you mean? Like they have a low credit score?
Lowest, yeah, let's start with low credit score. Let's start there.
Yeah, so when it comes to low credit scores, let's say they're below that 580 mark. I would kind of, it just depends where they're at really. If they, because a lot of the times what I ask a person first, it's like, oh, how's your credit, and usually they get it off these consumer apps,
Like
and
Credit
sometimes,
Karma, Credit
yeah,
Wise, I'm trying to think, Credit Sesame,
or
which
they check
those are soft
well,
pulls, right? Not full hard pulls.
yeah, I'm not too sure, but I know a lot of these consumer apps are kind of like inaccurate.
Okay.
So whenever like they say, oh yeah, my credit score is like 580, I'm like, okay, that means it's a lot worse than, not a lot worse, but it's a little bit worse than 580. It's probably like 560 or 570. So when it comes to that, I always like kind of refer them to like a credit specialist.
Got you. Now,
And
what does the
then,
credit specialist do?
so as far as I know, I mean, I'm not, I don't know what they
Right,
really do.
right.
They're just supposed to help them with their credit. And the weird thing about that is they can't relay to the consumer whenever they get partnered up with the credit company. The credit repair company can't relay the information to the consumer, like what milestone they're at, which is really odd.
What you mean by milestone? Like what milestone they at with their credit score, or
Yeah, like, oh, you're almost there, blah blah blah.
oh, you
Um,
just have they just have to keep on doing the work and then check it randomly, I guess, huh?
yeah. So
Hmm.
yeah. So credit repair company can relay the information to me.
What?
Yeah.
That is so crazy. Wait a minute. So if I had bad credit and you recommended me to this credit repair agency where I guess they would be the one who would basically say, hey, you got these things on your credit after they review it. They say, hey, these are things that you have in your credit. Maybe you need to pay this credit card off. And that kind of can bump your score up a bit here to help
Yeah.
you out to get qualified for the loan. Because I would imagine, because I don't know either, just like you, but I would imagine that they are looking at debt to income ratio to try to figure out what's the best avenue to decrease the debt to income ratio. And you pay that off. You don't know what your credit score is, but they'll call you and say, hey, Oscar, I got them qualified. You need to call them.
Yeah.
Get out of
Yeah.
here.
So yeah, that's what whenever I got partnered up with this guy, that's what he basically told me is he can't really tell them whenever they're, give them, a milestone update during that process. Like he'll relay the information to me and tell them, oh yeah, they're here or they're there, which was really odd, but I guess that's how it works.
So then you pick the phone up and you call the client and be like, hey, did you check your credit score lately?
So I haven't ran into that position yet because the people that I just referred, the clients that I referred to this credit company, they just started like a couple weeks ago. So I haven't really, followed up with them to see how they are.
Now, for the agents listening to this podcast, which I appreciate you if you are listening to it, if you're an agent, but if you for an agent that's listening to this podcast, when they go into that section of having to get their credit looked at and worked on, how do you as the lender look at them? Is there a nurturing contact? Maybe you gotta how far down the pipeline do you see that them actually coming back and coming back for business?
You know, with that, it just, yeah, I would just nurture them. Like I just kind of see it's like maybe 3 to 6 months. Sometimes when I send them off, like I only sent like two people, and one of them like already ghosted me.
Got
Just
you.
yeah. So it just really, I guess it's a hit or miss, really.
Yeah, okay. So we talk so what about like okay, so if they may so what happened they have a qualifying credit score, but they have some derogatory things on their credit report.
Yeah, so when it comes to that, it's like one big red flag when it comes to that. It's like you don't want to have any late payments in the last 12 months.
Okay.
So we kind of look at the credit report, and if they have any late payments in the last 12 months, then we just have to wait until that's clear. Because sometimes when we pull the credit report, if I pull a credit report today, it could be from a month ago, and it really, you just have to calculate how far, like where we're at right now, and whenever you pulled it, and what shows on that credit report. If you get what I'm saying.
Yeah, it's basically like, okay, so I may pull your credit. So this is what happens to a lot of people. Well, we're gonna get into the buying process here in a minute, but this is what happens to a lot of people in the buying process. I would guess it would be similar, is that you may pull the credit today, and a lot of the payments haven't been due yet, or they are coming just about to be due. And so they all look in positive standing at that point in time. But like during your closing process, it could be 15, 20 days in, all of a sudden you made a derogatory payment, made a late payment, and now it shows up and the lender sees it. It's
Yeah.
almost the same thing, right?
Yeah, so yeah, it is almost the same thing. And one thing to keep in mind too, like right before you close, like if you're gonna buy a home, they like once you get that pre-approval, and you're in that home buying like process, and you like submit an offer, and you're expected to close on X amount X day. Don't like be buying a car like during that process, because they do a soft pull, right before like during the underwriting process.
Yeah, so we're gonna come back to that because I got a lot of things about that part, right? That I can just whew, it'll just make you give you chills up your spine, worry about that part. But let's talk about that. Let's slide into the pre-approval. So you find a way where they're pre-approved, and then what does the pre-approval do?
What is a pre-approval? It's not like no contract or anything. It's just saying, oh, like this individual is pre-approved for let's say 300,000. Like we kind of just did we analyzed the credit report. We took in consideration like their income. Seeing where their debt to income ratio is at as well. And then we made an assumption of how much they're able to buy a home for. That's basically
Gotcha.
what a pre-approval is.
Now, for some agents, I don't know how many lenders talk like this, but for some agents, they don't want pre-approval. They went above pre-approval now. They're at I want a fully qualified buyer. Like if I'm going out and making these offers, I don't want it to be where they still have to get pre-approved for the loan. I want to know that this person qualifies directly for that amount. Have you seen that?
Directly for that amount. I mean, yeah, usually when we do a pre-approval, they're a pre-approval is kind of like it's a like qualification. Like, okay, like this is what they're qualified. Like, let's say this is what they're qualified for. Like 300,000. Like, we're doing our best to tell the real estate agent, it's like, hey, this is what they have to work with. And I guess when it comes to real estate agents, is like you have to we do our due diligence when it comes to this. We don't just hand out pre-approvals for no reason. Well, I don't. We thoroughly go through all the information, and that way we can give you a precise number, so we don't waste your time.
Hey, so I agree with you, but I've seen where no, not I don't want to say I've seen because I only been an agent for like 4 months. Let's not talk about what Craig's seen before 4 months, okay? But I've heard instances where basically a person with a pre-approval could actually be have they offer rejected by the seller because somebody who lender said they're already fully qualified for this loan has some type of identification for that. Yeah. I mean, obviously, I haven't ran into the situation personally myself, so I may be explaining it a little weird, but I feel like that's the thing is that basically you can have a pre-approval situation where, hey, yeah, you're pre-approved. You can go out and shopping for a house with a real estate agent, and you're within the specs, right? But then also, I've seen the conversation where the offer has already came in, and basically you already know this person is going to be good for the money at that point in time. It's not a hidden agenda behind it. They still have to get qualified or anything of that other sort went through closing. They are already qualified. Is that the same?
Yeah, I would say it's the same thing, because when it comes to the pre-approval, like we take everything in consideration, like how much down payment funds they have, and their income. So it's kind of like when it comes to that, I really don't understand what's going on, because that's what pre-approval is. Is like, hey, they're pre-approved. Like once you accept this contract, we can start getting the loan process through underwriting. That way, it can be actually qualified for the loan. But yeah, I haven't seen that before.
Okay, so how much is how long is a pre-approval good for?
So it just depends, like on the credit report. It just depends on the credit report. So it's like 120 days in Virginia, I believe. Yeah.
Okay, guys. So 120 days to execute an agreed purchase contract, right? And then it gets ratified after you've seen it already, right?
Yeah. So like Yeah, like give you the pre-approval, and then whenever you're in a ratified contract, I have to, see that ratified contract. That way we can submit the loan. That way we can go through underwriting.
Okay, so how rigorous? Okay, so before I ask you that question, so now you get the ratified contract, or do you before you get the ratified contract? Have you seen where the listing agent wants to speak to the lender to make sure the funds are good?
Yeah, so I've actually had that. So so yeah, so I've actually had that happen recently because I was dealing with this borrower who he was going to do a large amount of money down, you know, and which was kind of crazy. It's like I usually reach out to the listing agent. It's like, hey, like my borrower's good, you know, we make sure he's good. He has enough funds for down payment, and we took everything in consideration. He's a good candidate, right? That's what I try to do. I try reaching out to the listing agents. That way, they feel confident in the offer.
Got you.
But with this particular borrower, since he was doing such a large amount down, the listing agent was calling me. It's like multiple times. Hey, is this person good? Like, are you sure he has this much money that like in his bank account for this? It's like I was like, well, if I didn't hand out a pre-approval letter, like just take my word for it, which was kind of funny. Like I probably shouldn't have said that. I should probably said it in a nicer way, but I thought it was super funny when it comes to those large down payment amounts. That's when the listing agents start blowing me up and just questioning if this pre-approval is good.
Okay, so basically you may get a phone call or two, or you try to reach out to the listing agent in advance to make sure that, hey, the offer that you're getting is very strong, because it's a lot. That's all agents talk about nowadays in certain cases, is that they want to make sure it's a strong offer, that they don't want to have any lapse in the offer, that because one of the main things is that you have to bring a fully qualified buyer to the agent to get paid, right? So that's what a lot of people care about, and that's why
Yeah.
we're talking about it in that sense, is that they want to make sure the offer is strong. So, okay, so now it goes into underwriting after the loan has been submitted. How long is typical of an underwriting process?
So it really all depends like on communication, and that's why like communication is such a big deal in our industry. If the borrower can give me everything I need like in a day, underwriting can be done in a day. That's that's the reality of things.
Really? Because
Yeah,
when I bought this house, both houses, when I bought both houses, underwriting took about 20, 22, 23 days. Well, the first time I bought it, I don't think we wasn't at this electronic life that we are now. Like DocuSign was a thing then,
yeah,
but it wasn't. I was still getting documents in the mail, still like at that
got
point in time. But this time, it still took about 24, 25 days.
got it. Yeah, so no, when it comes to like underwriting, we can get it done pretty quick. I know like we're a broker, we shop with a whole bunch of lenders, but we have great relationships with the account executive with these lenders. So let's say if all parties communicate and I'm able to get all the documents I need, we can have it like underwritten in like if I submit it 7 9 a.m. in the morning, it'll be ready by the next day.
Really? So
Yeah.
what makes other lenders not in comparison to brokers? What makes lenders take so long to actually get some of these underwriting processes done? Then why are they feel like they're so extensive?
So I honestly believe when it comes to these other lenders, like it's I feel like they're just I really don't know. I really don't know why people take so long, but I think it comes down as like maybe some of those lenders are getting paid hourly, so that maybe they're just taking they're just taking their time. I have no idea, to be honest with you.
I would expected that answer. That's not the answer I was expecting. Okay, okay, that's reasonable. I can see that if they are a paid employee on the clock and not on basically closing the loan and getting whatever they. I don't know how lenders get paid, by the way. Speaking of which, but at the end of the day, closing a loan, I'm pretty sure it has a value on it, and that value gets paid out. So why waste time uh, on a loan that you can already qualify right away? I see
Yeah.
your point.
And then I think I mean, I also got to take in consideration. There's a lot of information too to digest, type to digest. So they're probably just like going through a whole bunch of information, and I'm pretty sure you have to like have attention to detail because you're going through so much information, and you don't want to get anything wrong too. That could be a
Yeah.
thing too.
Okay. So now let's get to the point where you were saying about things that you should avoid while you're in the underwriting process, closing after you got your pre-approval letter. And this goes all the way up until closing of that loan. And I would even suggest 24 hours after the loan closed, right?
Yeah,
Don't even think about it until 24 hours after that. Have you been in that house or you had those keys in your possession for about 24 hours first and foremost, right? So like you were saying that, don't go out and purchase a car, don't even do a soft pull on a car, don't even touch your credit at all. Make all payments on time
yeah,
and don't touch no more of your credit until after you got those keys up to 24 hours later.
yeah. That's what I would suggest doing because I recently had a nightmare. Tell you really quick, but this borrower I was helping out, I did a pre-approval on him, but when I pulled his credit, he bought the car like 2 days ago, right? Like 2 days before I even pulled his credit. So it didn't show up on the credit report. And we're supposed to close next week. So the lender did a soft pull on his credit right before closing, and it showed that he bought a new car,
Mm,
right? But we didn't catch that. I didn't factor that into the debt to income ratio because it wasn't on the credit report at the time.
mm.
Yeah, so don't think you can be sneaky. I have the pre-approval letter, and he hasn't asked me about his new car. If it does come down to it, and you do buy a car during the process, just let somebody know during that time.
Yeah, because it still may not affect the debt to income ratio, but
Yeah,
it's got to be taken into consideration, and it
yeah,
could disqualify the loan, and it could disqualify the purchase that you actually try to make, which can make you lose your earnest money deposit too, right?
yeah, it could. And then he did get disqualified for the purchase, but luckily, we were able to work with him and then figure out what he can do to close on time, which was great. But it's kind of crazy how things just happen like that.
Yeah, I mean that goes for furniture for your house, that goes for appliances for your house. I mean, I know you want to get all these plans done while you are waiting to move into your new home, and you're super excited, but don't touch none of that credit until after you had those keys for 24 hours.
Yeah, yeah, for real. What would you say, Craig? What would you say, like, I guess, like, new, if someone's trying to buy a home in 2023, like, what should people start doing now?
I think that you need to identify your. This is one of the things I was going to ask you about after we was going to close back on this because there's some tips and tricks to consider here. But I would say to me, you need to understand if you are ready to move. When are you looking to move? Because you got to understand factors of. You got to understand factors of seasons because right now we're like wintertime is like it's a slower mark. But if you decide to try to purchase in the spring or summer, you're going to be dealing with a whole lot more competition. It's going to be probably a lot more offers on one particular house that you're looking for, depending on the inventory in your community. And that's going to make it a little bit more competitive for you to actually find a home of value for yourself because value usually raises in the spring and summer and it kind of like stagnates and decreases in fall and winter where you see price reductions come from. So that's one thing. Clean up your credit in advance. Pull your credit report prior to even reaching out to a realtor or even reaching out to a lender because you want to see what your credit score is. And then once you do reach out, have that information available so that way, like, especially if you reach out to me, I can refer you. Okay, well, let me get you over to Oscar so we could talk about this so that way they can see if you can even qualify. So that way, if you don't qualify just yet, at least by the time that you want to move, that you're able to now decide, let me get my life together and get in this direction that I need to go to actually be qualified. And I think one of the most important things that you said is no late payments for the last 12 months. That's important because if you don't have that, you're going to make it harder for you to do your job to actually get them qualified in the first place. So
Yeah,
those three factors alone are things that I consider. But one of the main things that I would always tell anyone, know how much you want. Don't worry about how much you qualify for. Worry about how much you want to pay the
got it.
mortgage. That's the
Okay.
main thing, right? Like you may, like you say, they may qualify $480,000, but that $480,000 loan will make them at this point in time in this market, it may be a $3,000 loan.
Yeah.
Right. So you don't want a $3,000 loan more likely. So you want to figure out how much you're willing to pay on the mortgage that you're shopping for.
Yeah. What do you say about a lot of first time home buyers who want all these like bells and whistles on their home?
I feel like the agent is doing them a disservice if they don't talk to them about that in advance, right?
Yeah.
Understanding exactly what it is that they want, and this is kind of where I'm as a newbie, right? This is kind of one of those things where I'm working and getting stronger at and trying to get more proactive in is understanding the communities and understanding the years and of builds as well too, because as an agent, like certain people might ask for certain things, and you have to go back and you start looking at these properties. You're like, especially newer property. Everybody's always say, I want the newest property I could possibly get, but I want these things in there. Well, some of those things may not even be in a new property anymore. You know what I mean? Like, so now you gotta look and see how far back they stopped doing those type of models, right? Where
Really?
they was
What are some of
what
those
is the
things?
thing? Okay,
Yeah.
so now whoever watching this podcast is gonna know I'm talking about them. But look, one of the things is that one of the things that I have in notes for a client is that they want a island in their kitchen, but then they want a second level of a raised bar in their kitchen as well too.
Okay.
Most new builders don't build those anymore, from what I've seen. I've trust me, I spent like the last 3 days in the MLS looking to see because they want a newer model home. They almost want like a new construction home to where they can actually where they actually can help, where they can actually make changes to the end of it, right? Before they actually finish out the model.
Got it.
But then
Okay.
also this is what like one of the main takeaways that they really want in their home because they want to do it for hosting, bar, like the bar areas like for hosting and things of that nature or whatever, right? So, but really truly those bills haven't been seen. I haven't seen any of them that predates 2015 like that.
Wow.
So like that's like the type of things where I feel like agents have to, I don't know. I ain't gonna say all agents, but if an agent who really cares about their client's perspective and what they're trying to provide them that 5-star service, you want to know those type of things so that way you can kind of help your client know what they got going on. So to me, to answer your question about newbie, like new first time home buyers who want the bells and whistles, it's fine to want the bells and whistles, but you got to understand what type of payment it comes with that. So then once you try to figure out what that payment is, then that helps me show you the homes that's in your price range, and now you can kind of take what's your plus and minuses, because you may not get everything that you want in the home, but then they could give you the opportunity to make the home yours, because now you get to make the modification to the home that betters you after you have built your savings up, your cash reserves a little bit to make those changes. Some people don't want to make changes, but I think it's better to understand what payment that you can actually qualify for first that you really want to spend on.
Yeah, I think that's very important too because it all comes down to your payment, like what you're comfortable spending each month. You know, that's the big thing when it comes to these first time home buyers.
Yeah, I mean, I'm all about the bells and whistles. Trust me, if you wanna go look at all the bells and whistles, I have no problem showing you all the bells and whistles. But let's make sure you qualify for it first. But then two, let's not get you buyer's remorse because you go look at a home that is so overdone with bells and whistles, and you don't even qualify to buy it, or you don't want the payment. Once you find out what the payment really looks like. So that's to me, that's the worst thing an agent can do, because now you almost set your client up to be disappointed with whatever they actually going to wind up purchasing or putting an offer in at the later date, or putting no offer in at all because they want that house that they saw that had all the bells and whistles.
Yeah, and I bet that's super disappointing, like going into a home and then like figuring out that the monthly payment's like $500 more, than you want to afford.
Yeah, like I know real estate and cars are two different perspectives, but they have so much similarities, right? Because one is not a large asset as the other. But when you look at like for me, people gonna talk about me. Sure enough, whatever. I drive a Honda Sonata, right? And it's a 2016. I had made Chief, and I was like, man, I'm going to buy me a new car. So I looked at the actual. This is in 2016. I actually went and looked at the 2015 Honda Sonata. I'm gonna get the 2015. I don't even need a newer model car. I'm just gonna get the 2015. So I got there and I got in the car. I'm like, man, this thing ain't as bad as I thought it was, man. So you want to look at the 2016? I said, sure. Let me go look at it. I sat in the car and I said, dang, I'm going to buy this car. That's exactly what I said to myself.
Yeah.
But I already knew I could afford that car.
Yeah.
You know what I mean? So I had already psyched myself down. At the end of the day, I want the 2015, but the 2016 was only like going to cost me like $80 more in
Yeah.
payment.
Might as
Okay,
well.
so might as well get the 2016. So that's what I mean when you talk to clients, you want them to kind of know, what their expectations are, and helping them guide themselves through the expectations.
Yeah. And that's one of the first questions I ask you is like, hey, what are you comfortable like spending what's your monthly payment? What are you comfortable spending there? That's one thing I kind of ask them whenever I first start talking to them.
Yeah, I mean, so you would think that basically they should know. All right, but a lot of people don't take that into consideration. So that's one of the things
No.
that I always suggest when you're doing a buyer consult, just to, hey, like, really and truly, what do you want to spend? Okay, have you even looked at what that mortgage calculator looks like? Have you talked to a mortgage officer or a lender? And if you haven't, let's find out how much you really qualify for, and then how much that they possibly can recommend that you stay within a range of, so you can afford the type of house that you can afford each month without breaking the bank.
Yeah. Yeah, that is true. And one thing to consider too is like whenever you're thinking about, oh, how much should my monthly payment be, um you should because like you're gonna have to like get homeowners insurance, right?
Yep.
So if you've been filing claims on your insurance like the past couple years, or and then you go apply for homeowners insurance for your home, you're gonna have a higher monthly payment because your insurance cost is going to go up if you've been filing claims in the past.
Mm.
Yeah.
Yes, yeah. So that's something to take into consideration too. So even getting a speeding ticket can possibly almost hurt your insurance too, right?
I mean, well, I think, well, the buyer I was helping out, she was renting. So during
Oh,
her
so her personal property
yeah,
insurance went up. So I would
yeah.
think that the car insurance would make it go up too. So like if you get, like, it may not affect
Oh, yeah.
the what you have now, but the following month's car insurance cycle, when they raise your premium, it's going to kind of be a red flag too to the insurance company overall when they're trying to make your homeowners insurance.
Yeah, because yeah, a lot of people bundle their
Yeah.
insurance with their
Yep.
auto. Yeah, that's
Yep.
interesting. Yeah.
So to me, one of the things that I think people should always take into consideration is understand when it comes to your loan, what type of loan vehicle that you're going to use, right? So we didn't talk about those just yet, but we got a little time. So let's talk about them now. Like, we know that there's a conventional loan, a VA loan, FHA loan, and the USDA loan, right? I'm pretty sure you are doing more VA loans, right, in this area.
Yeah. Yeah, so usually my strong suit right now is like FHA, conventional, VA, the common three. Yeah, so there's a lot of good, for first time home buyers, they're great programs. If you're a VA borrower, 0% down, the only thing you have to worry about is closing costs. And that's roughly like 3% of the sell price of the home. So you kind of want to have that saved up. Or if you work with a really good real estate agent like Craig, he can probably negotiate that for you. Right? The
Damn
seller
right.
concessions.
Damn right. Seller concessions.
And then when it comes with FHA, it's 3.5% down, but then you also have to, factor in closing costs. So that's another 3% on top of that. But you can always negotiate that if you go with Craig. And then for conventional, there is a first time home buyer, but you have to like meet a certain income requirement. I don't know it off the top of my head, but it's a 3% conventional. And also got to factor in closing costs, which is 3%, because a lot of people leave that out. So a lot of people try to hook these first time home buyers. It's like, oh, all you need is 3.5% down for FHA loan. It's like, yes, you do, if you can negotiate that, if you can negotiate closing cost. But I always try to prepare for worst case scenario. So just always factor in that 3% of a closing cost.
Yeah, worst case scenario was all of 2020 to 2022. Like,
Yeah,
like at the beginning to June of 2022, you wasn't getting anything like for 2 years. Like, seller concession, I'd be damned. You gonna have to go. I'm going with the other offer that's on the table, who
yeah,
ain't offering anything. Like, so that is very true, right? Consider what your closing cost is now. So on the VA loan, is there a cap on the seller concessions?
um, I think there is a cap on seller concessions. I don't know it off the top of my head. I know with the VA loan, you can use seller concessions to like pay off debt, which is a cool thing
Okay,
too.
got you.
Uh,
Okay,
yeah,
then and I'm guessing FHA would have a seller concession cap as well too, but conventional they probably would. There wouldn't be one for seller concessions.
yeah. I'm not too sure on the cap.
Okay.
Yeah,
So I'm interested in learning more about the loan types so we can give viewers and listeners an opportunity to understand what is affordable to them and what they can actually have in their review as they think about what's as they prepare for 2023, because 2022 is in the review, and I think that's going to be one of the things that a lot of people are going to be dealing with lately. Well, coming up this following year is that seller concessions are going to be big because interest rates are going to look like they're going to be stagnant for a while, at least until fall of next year. So we'll see. I don't think they're going to balloon a lot, but I think they will be somewhat of an average right now. Where's conventional loans at today when you check them out?
yeah. I didn't check them out today, but last on Friday they were like around, I think it was like 6%
6%.
conventional. Yeah,
Okay. So yeah. So see, that's where I'm at right now. So I think that 6% is probably going to be what we're going to float for a little bit. And so my last question for you, and we'll round this up, is that what about people who say, "Oh, you should purchase now, and you can always refinance later"?
yeah. I mean, it's a good tactic, to get people interested in, but you have to like take in consideration if they're going to qualify whenever they do that refinance. That's one thing. But yeah, it's always good to I would say if you're ready to buy a home, but you're kind of like tiptoeing because of rates how they are, or what you're hearing all over the place. I would say buy if you can afford it, because you're going to build equity over time. And then when it comes down to it, if rates do drop, you can always refinance.
I think a lot of agents are pushing the buy now because you don't really know what the hell's going to happen in the market, and then eventually, you will get the opportunity to refinance when rates eventually drop. But I think what clients don't really understand, and what is hard, it's hard on agents. This is the hard part on agents because it is a paradigm where you have to understand where, yeah, rents are up against your neck. You're basically either spending more to rent or about the same as it would the cost to own at this point in time when you take everything into consideration. But a lot of people also have this fanatic dream of what they saw from 2020 to early 2022 should be the norm when it really isn't.
Yeah,
And I think that what that leads that down to is that people don't understand when interest rates increase, home prices drop, and when interest rates decrease, home prices go up. You know what I mean? Like you can afford
yeah,
more house. So I think a lot of people just don't take those into consideration. They don't really understand the shift in that a lot of times, and it makes it hard on the agent and the lender too to kind of like, hey, you gotta tell back some of those wishes.
yeah. Like yeah, it's kind of crazy because yeah, everybody has this like taste of what 2020 2021 was like. Because I have like borrowers coming to me, and then like I would like price out a scenario for them, like, oh, what's going to be my monthly payment at 300,000 or 400,000 at this rate, and they're kind of blown away by the monthly payment price because their friend bought a $400,000 home a year ago, when rates were super low. So they're getting this feedback from their friends like, oh, yeah, my mortgage payment is X amount. How come they're quoting you this, And it's all those people who aren't in the industry causing this storm,
Yeah,
which is kind of
yeah.
crazy.
It is, and it's not going to stop anytime soon. So you have to be. This is why I think it's important to have a power team in your corner, like a lender and a realtor who basically speaks the same language and kind of understand what the market and environment is looking like, so they can give you sound advice on how to go about building yourself up, or at least building out your reserves to actually be in the market to afford a home. Because is nothing like home ownership, and only way you understand that is if you actually been a homeowner or you're potentially trying to be a homeowner and you're sick of renting. Like really and truly, that's the only way you'll know. And
Yeah,
so that to me is where I think I'm at too, is that I don't believe a refinance scenario is for everybody. And like you said, you definitely have to qualify for it again. and to even get that rate down. And then in a lot of these cases for refinance, you got to have the cash for closing costs too, right?
Yeah, because you got to take it. It just depends what like a loan type you're trying to do, and then you have to
Right.
take into consideration the loan to value of the program. So you got to factor that in. But when it comes to refinances, you just got to think it's like where you're going to be at like a year or 2 years in life. Are you going to switch jobs? Because if you switch jobs, that might disqualify you depending on what job you go to.
Mm,
Right? Let's say if you go from W-2 to 1099, that's definitely going to be a rocky road because it's not steady income. I
man,
mean,
you're right.
it could be steady income, but it's totally in a different field.
Yeah,
But
and and then they may be sending 12 months of bank statements over to you, so you can average average
yeah,
it.
that was for the non qualified mortgage loan. But
Yeah,
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 man,
but
that's crazy.
it's a lot. Oh, was that Craig?
No, I ain't saying anything. Go ahead. I was listening.
Yeah, it's a lot of factors when it comes down to it. That's why it's definitely great to have professionals in your corner. That way, you kind of we'll do all the hard work while you just sit down and relax.
Right, right. Definitely. Like I got off this call with you. I got to dig back into the MLS some more and see if I can find this right house. So that's the type of things that we're looking at. So I appreciate this, Oscar, man. Hey, if you are just now tuning in with us for this episode and you didn't catch last week's episode, this is going to be a continuous conversation between a realtor and a lender to get you informed and keep you informed on what's going on in the markets, especially from our perspective, because we're growing our business just as much as helping you understand what's going on in the market too. So you're getting an interesting take and perspective from two people who just entered the real estate market to help and service the community. And we're going to continue this to build upon these conversations and see how far we take this.
Yeah, it's going to be exciting. Yeah, thank you, whoever just is going to watch this. If you have any questions, just hit us up.
Definitely. We'll leave our contact information in the show notes in the description, and we'll catch you in the next episode of the Real Estate Scoop, baby. So y'all have a good day. We'll talk to you soon.
Bye, Craig.
Bye.